Hello traders, welcome to my channel. This is Dion. Alright, so in this video I want to talk about how you can easily identify liquidity areas and how you can trade those areas. Alright, so if you're new to this channel, please consider subscribing, like this video and share. Also, you can follow me on my Instagram channel. It's a new channel. So like I said in my last video, when we are talking about liquidity, if I was supposed to make a video just on liquidity alone, it would take way too much time. All right, so this is why I'm just making short videos so that you don't lose interest. All right, so when you look at your charts, price normally doesn't move smoothly. Okay, there are those areas where you find there's a bit of consolidation. All right, there's a bit of consolidation. These are the areas that I want us to talk about today. So this is what you, it's not just consolidation. This is what we call a liquidity buildup. All right, I don't want you to be looking at consolidation as an area that you just have to avoid by any means necessary. All right, when you see this, you have to think of price as building liquidity. Okay, so what I mean by that is that when price is doing so, it's trying to go up, it tries to go down, it tries to go up, and it's maintaining certain levels. Okay, there's always a structure that you can follow. Of course, it's not going to be perfect like the way it is here. There's always a structure that it's obvious to your eyes. All right, so you can mark those structures as an area of liquidity. Okay, those structures are what we call area of liquidity. So the important thing that you need to always remember is that after every liquidity grab, price is going to take out that liquidity buildup at a certain point. All right, so this one is important because let's say, of course, you are in an uptrend here. If you know how to mark your market structure and you already know that you're already in an uptrend, what you are looking for in most cases is an area where you need to take a trade. Now, most of us, what we are waiting for is for price to go all the way down to that point of interest. It can be another block here, it can be a fair value gap. This is just for illustration purposes. So if it happens to go all the way down here, that's okay for you. But what I'm trying to make you understand here is that sometimes you find yourself in a situation where after price takes out this liquidity build up here, let's say you are already up there and then it's already London session. What you need to understand is that one side of liquidity has already been grabbed. Okay, and if you are on your 15-minute chart or 1 hour chart or whatever, whatever you use for market structure mapping, if this happens and then you still have a trend line liquidity still down here, and if you know how to mark your market structure, you already know that down here there's inducement. All right, so if you understand liquidity grabs, you are not just going to be looking at inducement here. Okay, you are also going to be looking at this trend line liquidity right here. So when this side has already been taken out, and then you have a sell setup happening above there, okay, what you need is to target this trend line liquidity here. Okay, you can target the trend line liquidity and inducement here. This is a counter trend trade. All right, you are going against the trend. The trend here is bullish, but you are going against it. But at least you know where you are supposed to come out. All right, so that is the importance. Uh, this happens. So now I'm trying to give you the sessions where you can look for uh, these consolidations. Okay, and again I'm saying it again. I don't want you to be looking at this as just consolidation. Okay, I want you to be looking at this as liquidity area, a liquidity zone. Okay, that has to be taken out at a certain point. And for you to know that it has been taken out, it's always given to you in an aggressive manner. Price always explodes when it's coming from liquidity area. All right. The thing is, there are already sales that we are trying to there are already sellers that were trying to enter here. Okay, because you can already see some people may use this area right here as a resistance area because price is just bouncing off that area. So at a certain point, someone might enter right there. Okay, so this is why price always take is going to take you out aggressively and then tries to target the other liquidity. So this happens mostly in New York PM session and the Asian range. All right, New York PM session and the Asian range. Okay, so this is going to make much more sense on the real chart. So let me just try to go direct to the real chart. All right, so this is the real chart. This is GU, the 15-minute time frame. Okay, so like I said, before price takes out a liquidity, it needs to move aggressively. Okay, it needs to be obvious. You have to know that this is price taking out liquidity, not just making a random move. Okay, so on GBP USD here, you can clearly see this is an uptrend. Price was breaking structure to the upside on the 15-minute time frame. Okay, now I want us to concentrate on these areas here. Okay, where there are dollar signs. These are the consolidation levels I was talking about. Okay, now I want you to uh, look at how price was going away from those areas aggressively. Okay, and how it was coming back to those areas. Okay, you can see here from the first consolidation here, price was taken out aggressively, okay, and then came back aggressively to take out the trend line liquidity. Even here, you can see how it drops aggressively and then takes out that trend line liquidity again aggressively. Even here, the same thing, taken out aggressively, drops aggressively. So these zones, you don't have to just look at them as consolidation. Most people, when they see consolidation, they can even close their laptop like, okay, there's no trade today. But that is your starting point. That is supposed to be your starting point. When you see these things, you have to wait for price to take out a certain level before you can take your trade. Okay, wait for price to take out a certain level aggressively and then wait for your sell setup or your buy setup. Okay, so let's start from here. Let's start somewhere from here. All right, so these are important because when you are taking a counter trade here, when you are going against the trend here, uh, when you find a sell setup up there, this was during London. When you find the sell setup up there, there's no need for you to expect the market to go all the way down here, because of course it's fine. The market can still, price can do whatever it wants to do. It can go all the way down here. But your target needs to be this trend line liquidity here. Okay? This trend line liquidity has to be your target. When that trend line liquidity is taken out, you can run away with your profits. All right? Now, in some cases where price goes all the way to your POI, if there's a POI, like in this case, you have an order block here. Okay, and if you know market structure mapping and you know how to mark your inducement, you would have marked your inducement up there. Okay, and then wait for price to go all the way down to this order block here in a discount zone. Okay, this is a discount zone. All right, when price goes all the way down there, in your mind you already know that this sell side liquidity has been taken out. It even took out this swing low right here. Okay, and after taking out that sell side liquidity, it went all the way down to that order block. Okay, this is an order block because it has a fair value gap up there. Now, after going into that order block, you can go all the way down to the 1 minute time frame, since you are using the 15-minute time frame. On the 1 minute time frame, if you've already watched my entry setups that you can use using fair value gap, this is one of them. Okay, I'll put the link in the description below if you want to see those. All right, so here you already have a balanced price range. A balanced price range, if you haven't watched those videos, it's just two fair value gaps in the same zone. Here you have a fair value gap this side, okay, and then you have a fair value. This fair value gap here was pierced, it was violated here, all right, making it an inverse fair value gap. And then this violation, this displacement that happened here left another fair value gap. All right, now if you take a trade here, of course you still need to put your stop loss below that low there. Okay, whatever you do with how you take your profits, it's up to you, but I advise you target these swing highs. Okay, these swing highs. Yeah, so let's go back. Okay, okay, okay. Sometimes price can go down like this. Just take out, okay, after taking out that trend line liquidity, and then it targeted this sell side liquidity here. It did not, if you know how to mark your, if you know how to mark your discount and premium zones, you would have done something like that. So you can see price did not go all the way to at least the equilibrium level there. Okay, so it just took out liquidity there and then went to that single candle order block, single candle order block right there, with a fair value gap above, and then continued going to the upside. So in most cases for me, when I notice price not making these long movements, okay, it's like price is breaking structure, but it's not making very big moves. Okay, this is a sign of a reversal that is about to happen. Okay, that is how I see price. I don't know how you see price, but that is how I see price, and it has helped me out a lot in these situations. Okay, so Now, talking about trading sessions, like sessions where you need to look for these liquidity build-ups. If you want, you can. So I said New York PM and the Asian range. Okay. So if you look at this, if you look, you can see New York PM Asian range liquidity build-up. New York PM Asian range liquidity build-up. New York PM Asian range liquidity build-up. All right, and you can see which session was taking out this liquidity build-up. It was London here. Okay, liquidity build-up manipulation, liquidity build-up manipulation, liquidity build-up manipulation. Okay, so in London is where you expect most of the time manipulation to happen. So I didn't want this to be a long one, so we can just end here. All right. If you have any questions, my DMs are still there, both Instagram and Telegram. Even the comment sections, you can use that. Otherwise, till next time, happy trading.